Here again with Smart System. And today's lesson of the day. The basics of charting. The first thing it's important to understand when looking at a price chart is exactly what you're looking at, and very simply, what you're looking at when you pull up a chart is the movement of a financial instrument's price over a selected period of time. So in this example, we're looking at a chart of Google. That's our financial instrument, and we're looking at a daily chart. And you can see here that time is represented on the x-axis, the days there. And then price is represented as by $1 amounts. This is stock on the y or vertical axis. Pretty simple there. Most charting packages that you can have, whether they're free or paid packages, have a variety of time frames ranging from tick, which is price by price, 2-minute to 5-minute to daily to weekly. There's tons of different time frames available. It's not really important right now at this stage to focus on which time frame you should be using. You should just understand that in general, longer term traders use daily charts and above. So daily, weekly, monthly. Shorter term traders use daily charts and below. So daily, hourly, 5-minute, etc. The most basic type of chart is a line chart, and it's the most basic type of chart because it shows the least amount of data, and basically all you're looking at when you look at a line chart is the closed price of a security connected by a line. So if you're looking at a daily chart, which we're looking at here of Merrill Lynch, this is just the closing price from Merrill Lynch's stock each day connected by a line. And in general, because it shows the least amount of data, traders will tend to shy away from using line charts. The only exception to that would be very thinly traded financial instruments. Sometimes the only price that's available for the day is the closed price for the day. So all you can look at for those is a line chart. But you probably won't run into that. The next type of chart is what's known as a bar chart, and this shows, as you can see, a lot more detail than a line chart. In addition to the closed price, which you see on a line chart, on a bar chart you also see the high for the day, the low for the day, the open and the closed price, the thin line or vertical line, or what you're seeing there is a line, which is connecting the top or high price with the low price for the day, or whatever time period you've selected. So the high and low connected by the vertical line, and then a tick on the left-hand side, representing the open for the time period you've selected, and a tick on the right-hand side, representing the closed for that time period. So you get a little better picture of what was happening during the individual time periods that you're looking at, which is important for things such as if the open is higher than the closed for the day, then you know you've had a down day. If the open is lower than the closed for the day, then you've had an update. And that's an important thing to be able to see on the chart, especially when looking at multiple updates in a row. And those types of things when trying to determine where to place trades. Some concepts which we'll go into in later lessons. Candlesticks charts, which are also referred to as Japanese candlesticks, sometimes because they originated in Japan, show all the things that are shown in a bar chart. So open, high, low and close, but with one additional or important addition. And that is in addition to showing the open, high, low and close price. Candlestick charts also have a thick body in the middle, which is representative of and colored, based on where the close was for the time period selected, in relation to the open. If the close was higher than the open for the time period selected, then the body of the candle, which is the middle part, is going to be in general shaded white. If the close was lower than the open, the body of the candle is, in general, going to be a shaded black. As you can see here, and I say in general here because some charting packages we use different colors. One of the charting packages I uses red and green instead of white and black. It's not really important what colors are used, it's just important to understand the concept of what you're looking at. Some verbiage here for you: the lines. The thin lines that connect the high and low are referred to as the wick of the candle. And the middle part, as we stated before, is referred to as the body of the candle. You can see an example here of a candlestick chart. As you can see here, instead of white, it's green on the upside and red on the downside. But exactly the same concept. You can see in the middle chart, middle of the chart there, the added detail that this gives you as a trader. With the big up candle on the hourly chart there, you can see that was very bullish, and the big down candle on the right hand side was very bearish. So just gives you a little more data there to look at, and pretty much we're gonna stick to channel the candlestick charts throughout these lessons because of the added detail they give you. So that's our lesson for today. should now have a good understanding of charts and the different charting options that are available to you as a trader. Have a great day.